Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark on whether Volkswagen can bounce back from its big scandal. Author and financial expert Jim Rogers believes street smarts can outthink so-called experts when it comes to maneuvering through tough economic times. We'll talk to Ross Clark right after this.
Unbelievable harmonies, spectacular performance, Bird Dog and the Vintage Electric Band, the ultimate tribute to the Everly Brothers and Simon and Garfunkel in Oliver, October 2nd, in Kelowna, October 3rd. Buy online and save at ontourtickets.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Nice to be with you, Jim.
What we want to talk about right off the top, I think, is Volkswagen and the situation there where they've been caught fudging the emission results because they put a friendly bug into their computers.
And it would appear that many of the technicians in the industry have been well aware of this for at least a year or two. And it may not just be Volkswagen that is the culprit. You know, the interesting thing, when you look at news like this and you watch the market reaction, and, you know, the Volkswagen stock has been under pressure this year. It's dropped from 52 to about 36 prior to the release of the details here this week, and then subsequently dropped another $10 from that. You know, we think back to other major recalls or recalls that were fought for a period of time, and Toyota definitely comes to mind. And back in 2006, the Toyota situation, stock broke, had been up around 100 and a quarter, and within a month, trading down sub 100 down into the, say, 95-ish range. So, you know, dropped a good 25% off those highs. But people don't stop buying the vehicles. And in this case with the Volkswagen, you know, they definitely will have a slowdown in the diesel sales without a doubt. But, you know, will they continue to buy Volkswagens? I'm sure there'll be some good sale prices in the next couple of weeks. But down the road, people's memories are short, and you would suspect that VW will bounce back reasonably well.
What's good for Volkswagen is good for Germany?
Well, and what on the other side of the game, when things go wrong for Volkswagen, Germany had a very, very poor week this week. The DAX index down more than the other indices over there. You know, Volkswagen is said to be, from what I read, 2 to 3% of the GDP. Well, that's pretty darn significant, and there's a lot of pride with, you know, that had been there with the company, and it's a shame to see what's happened. This won't be the end of Volkswagen by any means, and at some point there'll be an excellent opportunity. You know, if you look at the other examples where companies have had difficulties, we think back to even the Gulf and the problems that British Petroleum had. Stock sold off really hard, stabilized, and then bounced back well. So you take a look after the selling has run its course and things start to stabilize for the better part of a few weeks. There can be some excellent opportunities there, not just for short-term traders, but even for longer-term investors.
The market rallied earlier this week, and then it fell. Somebody said it's because Janet Yellen, the chair of the Fed, said, you know, I'm still going to hike interest rates sometime between now and the new year.
Well, they loved that on Thursday night. The market had been under pressure from the Thursday earlier, 1 week prior to that, when the market did not like the news that the Fed would not be raising rates, to then on the Thursday of this week, where Yellen clearly saying that before the end of the year something would happen. So that was taken very, very much as a positive. Market got off to a great start early Friday, backed off, and then stabilized towards the close. What I look at, there are times when markets are calm, and you have low volatility, and trends tend to be fairly well established, such as we were seeing in the latter part of last year, sort of November, December, right through until the first quarter of this year. And then there are other periods where you have these very dramatic moves, such as we saw in China in the spring and summer when things went exponential on the upside and then broke hard. Now we take a look at what's happened in North America since the middle of July, and how the selling grew to a real crescendo into August the 24th. And the type of climax we had there, the action following those type of moves becomes, from my perspective, very technically oriented rather than fundamentally driven. The fundamentals day to day will give you your ups and downs, but the thrashing that tends to happen after the sharp moves is such that you'll take 4, 6, maybe 8 weeks of consolidation. And the first part of that is that you should go to look for a knee-jerk reaction back up, one of these failed rallies. And typically they will come back anywhere from 40 to 60% of the decline. And this time around, from that August 24th low, the North American indices, whether it be the Dow, the S&P, the TSX, they all recovered plus 50% plus or minus a little bit from the spring highs. And there was about a 17-day bounce, trading days, very, very similar to the action following 2011 and 1998. And both of those were part of credit concerns that were out there, one being European credit, the other being the long-term capital situation with the Russian debt. And then I take a look at other breaks of 15% or more from weekly tops. 2008, 2000, 1990, similar. So we've got 5 what I would call analogs to look at, and each one saw similar bounces. That 50% recovery, 17 days plus or minus, and then of all the 6, they all generated the same type of overbought reading at the top of that first rally. And that's what we saw a week ago Thursday. So from there, you will tend to see prices give up ground. They get down into the middle of the trading range, find some support, and that's what we saw this Thursday, just prior to the Yellen statements that came out Thursday evening. So we've given back now half to 2/3 of the gains from the lows that we saw on August 24th. And this week was expected to be a down week because it's a week following an option expiration and following the quarterly expiration of the futures contract. So that tends to have a negative implication. So this week was pretty much in line with what you would expect. The next couple of weeks become, I believe, the very interesting ones here, because you would, in those examples, the analogs that I look at, we would expect to see a good oversold reading as the market goes down and retests or slightly undercuts the low that we had on August the 24th. And if we can get down into that oversold condition, that's where those other examples turned nicely and all but 2008 rallied back to either test the old highs or move through to new highs. Now, as a technician, I always have to be on guard for markets that look as though they're overbought or oversold, but can't seem to reverse. So what we have to assume that if we go down and become oversold and we're not capable of reversing to the upside, if we give up more than 2%, and we've gone back and researched this one, if we give back more than 2% on the downside after becoming oversold, that's the point at which the downside move can actually accelerate more than anticipated. So for investors, you might want to wait and see if we can test the lows and start to reverse nicely. That would be the point to look to be putting on longer term positions, because one must remember that where we are in the year, seasonals tend to be very weak starting in September through October, and then you get into your best 6 months of the year. This year, the break started early, so in theory, we could be looking at the basing concluding earlier.
Why is it that we seem to have stock market problems at the end of September, the beginning of October?
Good question. We tend to actually have a credit cycle that has difficulties as we move through this period of the year, and I think it's as much that as it is anything else. The equity markets definitely move with the credit markets, and if we look at what's been going on, the bond market in terms of the government bonds has been holding up exceptionally well, and tends to do well actually from June through September. And on a relative basis, the government bonds have been doing fairly well in here. However, if you look at the higher yield items, they've been giving up ground, and it's that spread in terms of risk that then tends to also find itself through to the equity markets. It's not every year that stocks make a break into September, October. In recent years, we've had a number that didn't have a break at all, and those tended to be the strongest years of them all. But the norm is that a good correction of 10 to 15% in the fall has been healthy, and the ones that have been more into the 20 to 30% variety have provided much longer term basis.
What's happening with precious metals?
This was a week where the weakness in equities did manage to bring about strength in the gold market. Gold more than silver. Gold found its way all the way up to 1155, closing off the week at 1148. The interesting anomaly here, a week ago, the commitment of traders numbers showed that the commercials during an up week were actually decreasing their short positions, so becoming more bullish, and the speculators were reducing their net long positions, and this was on an up week. Now, as of this week, we've seen that the commercials have continued in terms of reducing their shorts. So in a 2-week stretch, we've gone all the way down to just a net position of 19,000 shorts from commercials versus, that's down 36,000 in 2 weeks. Unusual, especially in downtrending in a bear market such as we've been in. And definition of a bear market would be that we've been under the 100-week moving average. A lot of people, would still say that we're in a bull market because we're up from the lows of 2000 or 2008. I tend to look at it on the basis of that longer-term moving average.
Ross, thanks a lot for chatting with us.
As always, Jim, it's a pleasure to be with you.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. His email, ross.clark@cibc.ca. Coming up next, Jim Rogers on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Jim Rogers. Jim's a best-selling author, renowned investor, financial commentator. His website is jimrogers.com. Jim, welcome to This Week in Money.
I'm delighted to be here, Jim.
You're speaking to us from Moscow. What takes you there?
Well, I'm actually sitting in a gigantic traffic jam in Moscow as we speak. I'm here for a board. I'm a member of a board of a very large fertilizer company, and there's a board meeting and a field trip to go see a new facility. So here I am. But at the moment, I'm just sitting in a traffic jam.
Your latest book is Street Smarts, Adventures on the Road and in the Markets. Well, it looks like you live what your book's all about.
Well, I've had some fun. Yes, there's no question about that. I've done a few things in my life. I grew up as a simple person in Alabama. I still consider myself a simple person from Alabama, but I have done a few other things.
You're in Moscow. Are you bearish or bullish on the Russian market?
Well, I'm optimistic about the Russian market. Strangely enough, the Russian market has been one of the better stock markets in the world this year, which people don't seem to understand. And actually the currency has not been such a bad currency either. So I have been invested in Moscow, and I continue to invest I'm looking for investments in Moscow, especially in agriculture.
Why are you so interested in the Russian market?
Well, the Russian market is probably the most hated market in the world, Jim, and I like to find things that are hated and cheap, but it's certainly hated. It's not quite as cheap as it was. As I said, it's been one of the better stock markets in the world this year, certainly better than the U.S. in the past, 9 or 10 months. And there are big changes taking place, so that somebody in the Kremlin has changed their attitude toward capitalists and investors and everything else. And they've got vast natural resources. And unfortunately, I'm an American citizen, but unfortunately for Americans, the U.S. is driving the Russians and the Asians together, which is going to be good for the Russians and the Asians, not so good for the U.S., but it's certainly good for Russia and its economy eventually.
The future of Europe, are the Eurozone and the Euro in trouble?
Well, yes. Unfortunately, the Euro is a great concept, and the world needs something to compete with the U.S. dollar. But unfortunately, the execution of the Euro has been pretty abysmal. They let people get away with phony bookkeeping. They let people abandon, everybody was supposed to have a sound economy and low debt or keep the debt under control. They let everybody ignore that and abandon it. So now the Euro is certainly in trouble. I don't expect it to survive in its present concept. I hope a Euro survives because, as I say, the world needs something to compete with the dollar. We need something to replace the dollar eventually. I'm afraid it will not be the Euro the way things are now, but we need to find something.
Mm-hmm. What about the Chinese currency? Do they have a shot at it?
Well, looking in the longer term, it's the only currency I see that's got a possibility to compete with and eventually replace the U.S. dollar. It's a gigantic creditor nation. It's a huge economy. It's a huge population. Unfortunately, it's not a convertible currency at the moment, although they are making it more and more convertible every year, or every quarter almost. As I look down the road, once they make it convertible, it's the only currency I see that can potentially compete with the U.S. dollar. It cannot be the Japanese yen or the euro or anything else, I'm afraid. And we do need something to compete with the dollar, because the U.S. dollar is a terribly flawed currency. The U.S. is the largest debtor nation in the history of the world, and the debts are going higher, not lower.
Is the Shanghai stock market exuberance and subsequent crash similar to the .com crash?
No, not the Shanghai stock market got overpriced and went up too fast this year, but it was certainly not a bubble. I've seen lots of bubbles in my life, Jim, and I've read about lots of bubbles. It went up too fast. It was maybe overpriced. It was certainly expensive anyway. But, the Chinese stock market has been the best performing stock market in the world over the past 12 months. So it has far outperformed the U.S. and Europe and most other major stock markets, even though it has had that big drop, that big correction.
Is the Chinese stock market the so-called canary in the coal mine? Can we expect Western markets to follow the same thing?
Well, I want to repeat, the Chinese stock market has been the best in the world. The markets that are canary in the coal mine are the U.S. and Europe. These are the markets that are down. The U.S. is down over the past 12 months. Europe is down over the past 12 months. So the canary is certainly starting to fall over. But the canaries in the West is not in China yet. China will suffer. There's no question about that. The Chinese are the largest trading nation in the world now. So if everybody else has problems, and if the canaries starting in the U.S. or starting in Europe, China's going to be affected, I assure you. And one thing I should add quickly, in 2008, when we had the problems, China was one of the things that bailed us out because they had so much money saved for a rainy day and they started spending it. Well, this time China's got a lot of debt. China has not had debt for several decades for many historical reasons, but now they've even got debt in China. Nothing like the U.S., but still, they're not going to be able to save us as much as they did the last time.
Has China's economic growth been so overstated that it could disrupt the Western economies?
Well, I don't trust any government numbers, Jim. Whether it's the U.S. or Germany or Australia or China, I don't trust any of them. So whether the numbers are overstated or understated, that doesn't really matter. What matters is what happens in the market, what happens to the real world, whether people are buying and selling products and financial instruments. So sure, as I said, China's got more debt than it had ever in the past several decades, and that's going to slow down anything that they try to do going forward.
Has China protected themselves somewhat? Because over the last 3 or 4 years, they've been buying every physical piece of gold they could find, and they encourage their citizens to do the same.
Well, there's certainly a lot of gold consumption in China. I can remember 10 years ago, or certainly 15 years ago, you could buy gold in China, but it wasn't easy. You had to go to various markets, etc. Now, or in the past few years, gold shops have opened up all over the place. Every city you can walk in and buy gold in many shops. So yes, the people have certainly bought a lot of gold. It seems to be slowing down some. You seem to have statistics. I don't know that the Chinese have been buying all the gold in sight, but I certainly do know that the citizenry, the people, the public, has bought a lot of gold. The shops are certainly there. They don't seem to be closing, not yet anyway.
Back in the 80s, the Japanese were major buyers of North American real estate. Then the real estate market crashed. Now the Chinese are major buyers of real estate in North America. Could this be the same thing all over again?
I'm sure it will be, Jim. I wouldn't be buying real estate in the U.S. Well, I would take that back. I would buy real estate in North America if it's productive, if it's farmland, for instance. I'm optimistic about agriculture, and if you can buy agricultural land at the right price, yes, I would certainly invest in North America, although there's better farmland to buy elsewhere. But I suspect that it too, one thing that I've learned about markets, when a lot of foreigners pour into any market, whether it's the Spanish stock market or London real estate or whatever it is, it's usually a sign of a time to be worried and be scared. So I suspect that this rush by the Chinese is not going to be good for them.
Would people in China try to buy North America because they consider it more stable than China, or is this just a little blip on the radar screen?
Well, I'm sure it's a combination of everything we can think of. Any rationale we've got is probably correct. Plus, one thing is that many people have learned that they need to diversify outside their own country. I certainly am an advocate of that for everybody, no matter whether you live in Canada or the U.S. or, wherever you live, you should have some assets outside your own country. I don't know if the Chinese are that sophisticated or they're just trying to get out of their own country. But there's certainly a big rush. You're right.
We've had a lot of controversy in the Vancouver area because of foreign buyers in real estate. People are under the illusion, or is it a fact that they're driving up the prices?
Well, Vancouver's become one of the most exciting cities in the world because you've had this gigantic immigration that's mainly from Asia. So I find Vancouver very, very exciting. I've written about it in a couple of my books of what a wonderful place it is now. Well, whenever you have an influx of population, especially an influx of population that's got money to buy, of course it has an effect on whatever they're buying. Obviously, when the Asians come, they got to have a place to live. So certainly it's had an effect. Maybe people think it's bad. It seems strange to me that a bull market is considered bad, but sometimes you see protectionists rise up everywhere in the world.
Is protectionism a good idea?
It's never, ever, ever been a good idea in the history of the world. It's certainly the people who are protected. It's a good idea for them, but for everybody else in the country, whichever country it is, it's never been good, and it's usually led to many, many problems and a decline in the population of the country which is being protected, which thinks it's being protected. It's always led to an eventual decline.
Jim, the conflict in the Middle East, very confusing for a lot of people. How is that affecting the markets right now?
Well, Jim, I must say, as I sit and watch the world, you look at the Middle East and you see everybody seems to be making mistakes. And not just one or two parties in the Middle East. There's the Israelis, the Egyptians, the Americans, the Russians, everybody. And everybody seems to be making mistakes, and the situation continues to get worse. I'm sure that many people see what I see, that we see that there is more turmoil. Turmoil has rarely been good for markets, especially if it escalates and turns into a bigger war. Eventually, we're all going to pay a big price for a war, if and when it comes. And I'm sure, we've had wars since the beginning of time, unfortunately, and I'm sure we're going to continue to have wars. And whether that's one reason, that I'm sure that's one reason the markets are starting to get worried now. Not the only reason, of course. It's not I hope it's not a big reason. I hope we're not about to have a big breakout of war. But who knows? We might. I mean, those guys at ISIS seem to be they have a lot of momentum from what I read in the newspapers anyway. So who knows? I don't know.
Why has there been a lack of action from Middle Eastern nations against ISIS?
Well, everybody wants somebody else to take care of it, for one thing. And secondly, they're not quite capable. Saudi Arabia doesn't have much of an army. It's got a big air force and a lot of armaments, which they bought from us, but they don't have much of an army. And who knows if it were ever really tested, if it would hold up. I'm a little skeptical of most of those armies in the Middle East. I don't know who would do it. I mean, Iran might do it because the Sunnis are very much, the ISIS is very much against the Iranians because it's a different religion. But I don't know who would do it. I mean, America won't let Iran send troops, into Iraq and into Syria. So how are we going to solve it? America funded these guys in the first place and gave them guns and everything else. And now all of a sudden, another one of those things that had unintended consequences. And now we're all suffering. I don't know who there is to take care of it. Syria's trying, but Syria's not capable. Iraq is trying, but Iraq is not capable either. I'm not sure there are any capable armies there, except the Israelis, of course. But the Israelis are not about to send their whole army off to fight ISIS, not yet anyway.
Right, why should they do the fighting that the Muslim nations should be doing, I think?
No, I agree with you 100%, and that leads me to the U.S., Canada too. But I don't know why we started them. We didn't start the whole thing, but we were initiated ISIS. We gave them guns, we gave them money and everything, and said, now go fight the Syrians. And they did, but then they said, wait a minute, we're going to take this and fight for ourselves. We're not going to listen to you anymore, and we don't like you anyway. So now they're fighting against us. It would be much better if we had just stayed out of it. And if they want to all kill each other, let them kill each other. I, for one, don't particularly like sending tax money or troops or anything else. I'd let them kill each other and solve the problem themselves. Let them sort it out. They're not likely to invade Vancouver anytime soon.
What's the economic impact going to be of these hundreds of thousands of immigrants fleeing Africa and the Middle East?
Well, fortunately, throughout history, immigration has usually been good for the countries where the people go. 100 years ago, 150 years ago in the U.S., we gave people land. We begged people to move to the U.S., and it certainly made America great. You can go around, immigrants usually bring energy and ambition. You got to be a brave person and an ambitious and energetic person to pack up and leave your own country. Now, a lot of these guys seem to be more desperate than showing ambition, but they are showing initiative and ambition. They wouldn't be leaving. Pretty tough. You see what they're doing to get anywhere. Fortunately, the Germans have said they're going to take a lot of them, and so have other countries too. I'm not quite sure whether the Germans are going to get how they're going to handle it. But most of Europe has a very serious demographic problem, Jim. I mean, if you look at the demographic charts, every country in Europe, nearly every country in Europe's got a horrible birth rate. They're not replacing themselves. So they all need something to replace their demographic situation, and immigration is good. I'm not quite sure that they would have planned to do it this way, because these people are desperate. Normally you want to control the immigration which comes in and be more selective. But it's going to cost somebody some money. Obviously the Europeans are going to have to pay a lot of money for this. But it will give them new workers, young workers. Obviously most of these people are young. So it'll help their own demographic problem. In the interim, it's somewhat disruptive, as you can see it. You see it on TV or in the newspapers.
Well, I have heard Germany say it considers, taking 800,000 people an asset.
Well, I happen to agree with that. That's less than 1% of their adds less than 1% of their population. And as I say, they have a serious demographic problem in Germany, not just Germany, everywhere. And the Germans have a little bit more money than many countries, so they can probably afford it.
The ratio of New York equity markets versus commodities is at an all-time high. Do you see commodities continuing to decline, or are they about to make a reversal to the upside?
Well, I'm very bad at market timing, Jim. I'm the single worst short-term trader in the world. I would suspect that some agriculture is probably making bottoms. Iron ore, I doubt if it's making a bottom since the iron ore companies all expanded so unbelievably dramatically. But I would suspect that we're probably near a bottom in many of the commodities. I'm not buying gold and silver at the moment. I haven't bought gold and silver for several years, although I own it. I own gold and silver. Actually, in the next year or two, gold and silver may make a bottom too. And if so, I hope I'm smart enough to buy more.
Which commodities do you see going forward?
Well, I'm a pretty bad market timer. Whatever I tell you, Jim, is probably what you should sell. But things like rice and sugar are certainly very cheap on a historic basis.
The U.S. dollar topped in March of this year. Are you bullish or bearish on the U.S. dollar now, and why?
Well, the U.S. dollar is my largest currency position on the long side. The U.S. dollar is a horribly flawed currency. The U.S. is the largest debtor nation in the history of the world, and yet it's getting worse. Having said that, you'll probably say, well, why do you own the U.S. dollar? Because there's a lot more turmoil coming, Jim, in financial markets around the world. And in periods like that, people look for a safe haven. They think the U.S. dollar is a safe haven. It's not, for the reasons I said. But there's nothing else. You're not going to put your money into the euro or the Japanese yen or something. It's not that easy to buy Chinese renminbi. So you're going to see money going into the U.S. dollar as a safe haven. It's certainly going to get overpriced eventually. Could even turn into a bubble depending on how bad the turmoil is. That's why I own more U.S. dollars than any other currency at the moment.
Based on your views for the U.S. dollar, what are the implications for precious metals?
Well, as I said, I'm not buying. I haven't bought gold and silver for a few years, other than a few coins and gifts. In my view, what's going to happen, if I'm right, the U.S. dollar is going to go higher. Many people think that's a negative for gold and silver. Gold and silver will go lower, which will be a buying opportunity. I mean, an ideal scenario would be, for me, the dollar goes higher. Eventually, I have to sell it because it gets overpriced. But by then, gold and silver would be down because of the strength of the U.S. dollar, and I would switch out of the U.S. dollar into more gold and silver. But who knows how the world's going to work.
Is playing currencies right now a good idea?
Well, yes, it's always a good idea to invest in something that if you know what you're doing. There are always opportunities in nearly every asset class. Even in bear markets, there are great opportunities in stocks, either on the short side and some on the long side. So yes, if you know what you're doing, any asset class is a good idea. And especially these days, with the turmoil that has occurred in currencies, and there's going to be a lot more. So give you people who know what they're doing opportunities on both the long side and the short side.
Any idea how long low crude oil prices will last?
Well, and maybe we're certainly making a bottom now because, the fundamentals get much better. The world has used more oil than it's discovered in the last several years, except for fracking. Fracking is not making any money at these levels, and the frackers are now scared to death. And fracking doesn't seem to work in some other countries. I'm not sure why. I'm not a geologist, so I don't know. So I suspect we're making the bottom if we haven't already made the bottom. The caveat to that is that I just mentioned the turmoil that's coming, and we're going to have some hard times, and in hard times, everything goes, most things go down, and some go down to very strange levels. But I suspect we are making it may be a complicated bottom, but we're in the process of making a bottom for energy.
What about all these people who've bought SUVs expecting low oil prices to continue? Will they regret buying gas guzzlers just a few months or even years from now?
No, but you're exactly right. It happened before. I can certainly remember the last time when oil prices started going up. Many people are going to rush to buy SUVs, and they all looked at each other and said, how did we do it? It's going to happen again.
And of course now there's 9 and 10-year car loans. What's that going to do to the financial institutions?
Jim, I'll repeat, we're going to have financial turmoil in the next couple of years, partly for things like that. People went out and borrowed a lot of money. It was a lot of easy money. The 9-year car loan was would have been, unheard of even 15 years ago. Some of the loans that people are getting, not just for cars, but for everything now, because of all this easy money, and people are buying. But it's too much of a good thing. It usually turns out to be a disaster.
We're speaking with Jim Rogers, who's in Moscow right now in a traffic jam. We were talking about bubbles and financial bubbles. The world, it seems, is awash in debt. What's going to happen? Is that going to be called someday, and what is that going to do to everybody?
Well, Jim, you remember 2008. 2008 was a big mess because the world had so much debt that it built up over the past several years. Well, now the debt is even higher and higher and higher. People in Europe have been talking about austerity, but every country in Europe has more debt this year than last. They will have more debt next year. So there has been no austerity. Nobody has dealt with a debt problem anywhere, certainly not in the United States, or even in the states of the United States. So we're going to have a much worse economic problem the next time we have one, and certainly we're overdue. As you know, every 4 to 7 years since the beginning of the Republic in the U.S., we've had an economic problem. So we're overdue now. The next one that comes is going to be worse than in the past because all this debt, which has gone higher and higher and higher. I hope everybody's aware of what's going on. I hope everybody's worried, and I hope everybody's prepared, or is getting prepared.
I've seen commentators on Fox television make fun of Greece, saying, oh, the U.S. is much wiser. We would never get into that situation. Yet the state of Illinois right now is issuing IOUs to state lottery winners.
Well, the U.S. is not going to get in that. You're making a very good point. We are in that situation. I mean, the U.S. is technically bankrupt. We're certainly not having the riots and everything that they're having in Greece right now. But don't worry, just hold on. Soon enough, it's going to be evident that we in the U.S. have the problem too.
Can you see a point where the government will start dipping into bank accounts to make sure the banks don't fail?
Well, they've made the law. They've changed the law in the U.S. and other countries so that if in the future a bank gets into trouble, the government's not going to bail it out, that they are going to reach into the bank account and make the depositors bail out the bank, which is not a particularly good system, if you ask me, but it at least will make people be more conscious of what's going on with their own bank. It used to be, 100 years ago, you didn't open a bank account unless you were sure the bank was sound. Those days may come back because of these new laws where the government can take your money out of the bank to save the bank account. Now, will they take it to save themselves? Probably. That's already started happening in some countries. The governments have started taking or commandeering the pension plans. What they do is they go to the people with pension plans and say, oh, we're going to save you for your own good. We're going to give you bonds and take your money from your pension plan because you're having trouble making money in your pension plan. It's a lie, of course. It's a scam, but they've already started in some countries taking people's pension plans. I suspect that will be what will happen next.
There's talk of eliminating paper currency and making it all digital. What would happen if they did that?
Well, one reason they want to do it, of course, is because then they really can control everything. They know everything you have. They know where you spend your money, and they can just grab it very, very, very easily if all of your assets are on your computer. The governments would love that idea. From their point of view, they don't have to print the paper money, they have to account for the paper money, etc. Technology has changed everything we know, Jim, and will continue to do so. It may happen. It will be presented to all of us as good for us, as good for the world. What is really happening is it's good for the government more than it is good for us. It might start out being good for us, and it will be good for us. Make everything a lot more convenient and easy. But in the end, I'm afraid we being the public, will be the ones who suffer.
Well, I've heard if they try to eliminate currency, people will invent their own because they like to do private transactions that aren't tracked by the government.
Well, that's the way life has been for most of the past 2,000 years. It's only been in the past, maybe this century or the last century, that governments had monopolies on paper money. It used to be people could and did use anything they wanted. If you wanted to use sugar cubes as money, you could. Or seashells or gold or whatever you want. That's the way the world was. And it would be good if that came back, because then people wouldn't have to do everything that the government say. Ultimately, that may lead to what we're talking about, especially if money becomes more and more concentrated in an electronic manner. Then you and I can use what we want as money. And that would be good for the world if you ask me.
Is worldwide economic destruction being caused by accident, or is there some kind of plan behind it?
Is worldwide what kind of destruction?
Well, you're talking about how all the different markets and the turmoil out there, it looks like the world's economy is in a lot of trouble. Is this being caused deliberately, or is this just an accident?
No, it's caused by incompetence. I mean, most of the central banks in the world have no clue. And unfortunately for us, this is the first time in recorded history that every major central bank has been printing huge amounts of money. The Japanese, the British, the Europeans, America. No, it's major incompetence, and by politicians who think just run up debt. Don't worry about debt. There are many politicians who say out loud that debt is good. Well, it's not, because ultimately, maybe it's good for a while, and it is good for a while if you handle it carefully. But ultimately, it's always led to destruction. But Jim, it's incompetence. It's not intentional. It's just hopeless incompetence by politicians and bureaucrats.
Should we pay attention to or care about the U.S. election?
Well, we need to pay attention. I mean, everybody should vote. I always vote. I'm proud to say I've never voted for a winner. If you look at the people who won the presidency in my lifetime, you can see why I'm proud I've never voted for any of them. But we have to pay attention. But basically, it doesn't really matter that much, as you possibly point out, because in the end, the differences are not much. And in the end, the major difference is if you get elected, your friends are better off, and if you lose, your friends are not better off. So you have to pay attention, because somebody's friends are going to be better off, and they're going to do better. But other than that, I mean, I don't see anybody there that's going to make a dramatic difference. I mean, if Donald Trump wins, it's going to be bankruptcy and war, but it may be bankruptcy and war no matter who wins.
Well, he certainly isn't scared to go bankrupt. He's done it 4 times.
I know. And he says that he tells us all that it's good. It was smart what he did. But on the other hand, think of all the people who saved their money, carefully saved their money, and then invested in Mr. Trump because he made them promises and guarantees, and then they wound up losing all their money. If I were one of those people who saved and invested in Mr. Trump, I wouldn't think this was such a wonderful thing, which he tries to tell people it is.
And governments just can't declare Chapter 11 either, can they?
Well, they can default. They may not declare Chapter 11, but they can certainly default, and they have throughout history. Nearly every government in the world in history has defaulted at one time or another. And there are many ways to default. You could just either stop paying, or you can inflate the currency away. There are many ways to default. People, when the Soviet Union collapsed, they still got their pensions. The money was worthless, though.
What's your best advice for investors today?
Well, first I said, be knowledgeable, be worried, and be prepared. And the best way to be prepared is to invest only in what you yourself know a lot about. Don't listen to hot tips from me. Don't listen to hot tips from anybody. If you don't know about a potential investment, don't invest. It's better to keep your money in the bank earning small interest, rather than investing in something you don't know about. Now, that leads to the question of which currency if you have your money in the bank, you gotta have your money in the right currency. A lot of people put their money in the Icelandic krona a few years ago, and then when the krona collapsed, and they wound up losing everything. So it's not that simple, but my main advice is don't invest in anything that you yourself don't understand 100%.
It's worked for Warren Buffett.
Say that again?
I said, well, that's been Warren Buffett's philosophy. Don't invest in things you don't understand.
He's done fairly well for himself. But again, I would say that should be the advice that everybody follows. And it's better to do nothing than to do the wrong thing.
Isn't the real challenge keeping your money in bad times?
Always has been. Unfortunately, the world's history is full of bad times, and most people suffer in bad times. And one of the reasons they suffer in bad times is because during the good times they get carried away get involved with things that they don't know what they're doing. People will tell them, oh, you should do X, Y, or Z. And in the end, of course, they suffer.
I think the high-tech bubble might have been one of the best examples of that. People just thought if it's high-tech, it has to be good.
No, I know. Well, don't worry. The same thing will happen again. Now, these days, biotech has to be good. There are many things that have to be good now. Just be careful. When everybody's certain that something has to be good, be very, very careful.
Jim, how can people find out more about what you stand for and some of your ideas?
Well, the best way is I don't have anything to sell. I don't have a fund, or I don't have any investors that I look after. I mean, you can read my book. My books will certainly tell you. I've done 6 books now, to my astonishment. I guess the most recent one is called Street Smarts, which is essentially a memoir of how I got from the backwoods of Alabama to here. So maybe I guess that's the best one.
And, of course, they can check out your website, jimrogers.com.
Well, they can, but that's really nothing. That's basically my schedule of where I'm making speeches and appearing. It has I went around the world several years ago. It's really documenting that trip around the world. Nobody's ever driven around the world at the turn of a millennium before. So my plan is it'll be there so that people have a historic record of what the world was like at the turn of the millennium.
Jim, thank you so much for chatting with us.
My pleasure, Jim. Let's do it again sometime.
And good luck getting out of that traffic jam in Moscow.
Thanks. Okay, bye-bye.
Bye-bye. That wraps up the show for this week. Thanks to our guests, Ross Clark and Jim Rogers, and thank you for listening. Comments or questions for This Week in Money can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.